So it was the time of 1973. The United States was on top of the world until it wasn't. In a matter of months, the American dream hit a brick wall. Oil prices spiked 400%, inflation didn't rise, it exploded, and unemployment hit 9%. That made a brutal recession followed. And that changed the world forever. Now look at the calendar, it's 2026 and we are 1 month into the Iran-US war that ignited on February 28th. And the Strait of Hormuz, the world's most important oil artery, is slammed shut. Global supplies choking, oil prices are screaming toward records high, and central banks, they are paralyzed. The Federal Reserve is trapped in a nightmare. In the past, they could print money to save the economy. But today, with inflation already high and energy costs are rising, their hands are tied. And when this sequence of events happened in 1973, a global collapse followed. So the question we have to answer today is the 1973 oil crisis repeating itself right now? And if it is, how much deeper can this recession can go? I am Jack Cross, and in this video we are going to connect the dots between the ghost of 1973 and the chaos of 2026. We are looking at the history, the data, the devastating reality of what this means for your bank account, the markets, and the global power structure. So let's dive in. And before we talk about the 2026 war, we have to understand the era of easy growth that preceded the 1973 crash. So after World War II, the US stock market enjoyed a golden age. From 1945 to 1970s, the market saw a staggering 350% total growth. This was the era of the Nifty 50. Think of the Nifty 50 as the S&P 500 of the 70s. The 50 largest, most reliable companies in America, names like Polaroid, Coca-Cola, and McDonald's. At the time, investors believed these companies were so dominant they could never fall. They were one decision stocks. You buy them and you never sell. But look at the valuations of these stocks. They were insane. Coca-Cola was trading at a PE ratio of 46. McDonald's was at 71, and Polaroid, the AI stock of its day, because of its instant camera tech, was trading at a PE of 95. These top 50 companies captured 45% of the entire US market value. People were blinded by growth. They are convinced the party would never end. But there was a silent addiction fueling this party. That was cheap oil. Life before 1973 was a dream for the Western consumer. A barrel of oil cost just $3. It was literally cheap as dirt. The US economy was riding high. Every suburban house had 2 cars, huge land yachts that guzzled gas because fuel was an afterthought. Jet travel was becoming a standard for the middle class. Europe had finally rebuilt from the ruins of World War II, and the developing nations were industrializing at record speeds because of cheap oil. Oil powered everything: the factories, the farms, the plastics in your kitchen, and the fertilizers growing your food. Growth was skyrocketing, and because oil was $3, people were happy. But geopolitics was a powder keg. In 1960s, OPEC was formed, a club of oil producing nations like Iran, Saudi Arabia, Kuwait, and Iraq. They realized they had the keys of the world engine. Meanwhile, tension in the Middle East were boiling over. So since the Six-Day War in 1967, Israel had occupied the Palestinian territories, the Golan Heights and the Sinai Peninsula. The US under President Richard Nixon was a supporter of Israel, and on October 6, 1973, the powder keg blew. Egypt and Syria launched a surprise attack on Israel to reclaim their territory, and Israel took heavy losses early on, and the US responded with Operation Nickel Class, a massive airlift of $2 billion in emergency aid, including tanks, missiles, and F-4 Phantom jets. And the Soviet Union, on the other hand, backed up Egypt and Syria. It was a Cold War proxy battle, but the real weapon wasn't a missile, it was the black gold. And on October 17, 1973, the Arab members of OPEC had enough. They announced an oil embargo against the United States, Japan, United Kingdom, Canada, and the Netherlands. And the impact was instantaneous. Oil prices didn't just rise, they exploded from $3 to $5 overnight, and then hit $12 by early 1974. That is a 400% spike. It was a global heart attack. Imagine waking up and finding the cost of driving to work has quadrupled, becomes 4 times. Lines at gas stations started at 5 a.m. If you were not in line before sunrise, you didn't get fuel. Rationing became the new law of the land. They introduced odd even days. If your license plate ended in an odd number, you could only fill up on odd numbered calendar days. Tempers flared, fights, actual fistfights broke out at pumps over the last gallon of gas. Truckers, the backbone of the economy, went on strike. They blocked highways with their rigs. No fuel meant no deliveries. And remember those bulletproof Nifty 50 stocks? When the reality of the oil crisis hit, the overvaluation was exposed. The market shattered. 45% of total market value was wiped out in months. McDonald's dropped over 50%. Coca-Cola dropped 60%, and the Polaroid, the crown jewel, crashed 90%. And the global economy was a car with a blown engine. And this is when the world met the ugliest monster in economics. That's stagflation. Now let's bring it to the present, March 2026. For 1 month, the Iran-US war has raged. The Strait of Hormuz, a narrow choke point through which 20% of the world oil flows, is effectively closed. And we are seeing the 1973 script play out in high definitions. The news from around the world is grim. The Philippines has declared a national emergency with only 45 days of oil left. Slovenia is the first EU nation to bring back fuel rationing. And Australia is down to 38 days of supply. In the US, gas prices are breaking records daily, but there's a new twist. This time the petrodollar is under attack. Iran has declared war on the US financial system, stating that anyone buying US treasuries is a legitimate target. They are allowing ships through the strait only if payments are made in Chinese yuan. And this is the beginning of the petro yuan and the erosion of American financial dominance. The Federal Reserve is in a worse position that they were in 1973. Now let's look at this chart. So look at this blue line, that is the Federal Reserve balance sheet. In simple terms, that's the money printer. And every time you see the line spike, the Fed is flooding the economy with trillions of dollars in liquidity and what we call quantitative easing or QE. Now here's the trick. Usually the Fed has a get out of jail free card. Notice that every time they fired up the printer in the past, like in 2008 and 2020, the red line oil was absolutely collapsing. And why does that matter? Because oil acts as a massive shield. It kept the cost of living down, which gave the Fed the cover they needed to print money without immediately triggering a massive inflation spike. And as long as energy was cheap, they could play hero. But look at where we are right now. The shield is gone. Oil isn't collapsing, it's spiking and staying volatile. This means the Fed is officially trapped. If they try to print money to save a slowing economy today, they aren't just adding liquidity, they are pouring gasoline on an inflationary fire. And without the oil buffer, the Fed has no cover left. And every dollar they print now is going to hit your wallet twice as hard. If the Fed prints money now to stop the 2026 recession, they will turn high inflation into hyperinflation. Because energy costs are driving the price of everything up. And we are already seeing the fallout. 92,000 jobs were lost last month alone. The UN World Food Programme warns that 45 million people are headed toward acute hunger. Because fertilizer, which is made from natural gas and oil, has become too expensive for farmers to buy. And we are at the start of the planting season and many farmers are simply giving up. No fertilizer means no crop means no food. So what happens next? In 1973, the embargo lasted until March 1974. Peace talks eventually nudged oil price down, but they never went back to $3. The world changed forever. It forced the US to create the Strategic Petroleum Reserve and launch Project Independence. Today the rhyme is sounding louder than ever we have. Geopolitical war in a key oil region, supply chain paralysis via the Strait of Hormuz, overvalued stocks that were priced for a soft landing fantasy, and a trapped central banks with no good options. And if the Strait of Hormuz isn't reopened soon, we are not just looking at a recession. We are looking at a fundamental restructuring of the global economy. So what do? And the key is not to panic, but recognize the signs. And in 1973, the investors who survived were the ones who moved out of overvalued growth fantasies and into hard assets and companies with real pricing power. And the biggest risks are always the ones people ignore because they think it can't happen here. But it happened in 1929, it happened in 1973, and it's happening in 2026. So I am Jack Cross, and on this channel we connect the global events to your wallet so you can see the bigger picture before it hits you.